Dear students, in today's class, you are going to learn something about calls in arrears and calls in advance. I have already written a problem on the issue of shares here on the board. And in this problem, information about the calls in arrears and calls in advance is given. Therefore, you are going to learn how to pass the journal entries when such information is given in the problem. Before going to solve the problem, let us try to understand the meaning of calls in arrears and calls in advance. Calls in arrears. What is the meaning of calls in arrears? You know that whenever a company issues the shares, the amount will be collected in different installments. Whatever the face value of the share is there, that face value will be collected in different installments as application money. Take for example rupees 30. Next one is as allotment money rupees 20. Next one is as first call rupees 25 and as final call rupees 25. In four installments, assume company is going to collect this face value of rupees 100 from the shareholders. Here what the company does, once the shares are allotted to the shareholders, it starts collecting the next installments. When the allotment letter is sent to the shareholders, such shareholders are required to send the allotment money to the company as mentioned in the allotment letter. In the similar way, after receiving the allotment money, again as and when the company is in need of finance, that time it will ask the shareholders to send the call money. Okay, even after making the call, if some of the shareholders won't make the payment, the amount which is not collected yet from such shareholders is called as calls in arrears. Very simple thing is that assume that company is collecting call money on 1000 shares and company has asked to pay rupees 20 per share as call money. Company has to collect how much? Rupees 20,000. On 1000 shares, rupees 20 per share is the call money. Instead of 20,000, if company collects only rupees 18,000, then rupees 2,000 which is not received by the company from the shareholders is called as calls in arrears. Company has already made the call, but some of the shareholders have not paid the call money. Therefore, whatever the amount is not collected yet by the company, that is rupees 2,000 here, is called as calls in arrears. Whenever calls in arrears is given, that time that account is to be debited. You see here, when call money is received, what journal entry we pass? Assume that this is the first call. This is the first call money. If full amount is collected, we pass one journal entry. What is that? Bank account is to be debited with the amount of rupees 20,000. Rupees 20,000. Next one is share first call account is to be credited with the amount of rupees 20,000. This is the journal entry when we pass when complete amount of call money is collected by the company. Sometimes some of the shareholders might not have paid the amount. In that case, what we do? We take calls in arrears account in the entry. Calls in arrears always shows debit balance, that you have to remember. How to take that one in the entry? You see, bank account is to be debited. You take this example. How much amount is collected by the company? Only rupees 18,000. Instead of 20,000, if 18,000 is collected, that 18,000 is to be written here and debited to the bank account. Rupees 18,000. Rupees 18,000. And still how much amount is not collected yet? That is called as calls in arrears. Calls in arrears. Account is also debited. Calls in arrears account is also debited with the amount of rupees 2,000. Whatever amount is not collected, that amount is to be debited here. Then after that, we write to share first call account. Very simple thing is there. Share first call account. Rupees how much? Rupees 20,000. Here bank account is credited because actual cash collected is only rupees 18,000. Therefore, that is debited to bank account. Next one is whatever the balance amount is there, which is not collected yet, is to be debited again rupees 2,000, and share first call account is credited with the amount of rupees 20,000. In the similar way, sometimes allotment money might not have been collected by the company. In that case, what we have to do? We pass the first journal entry, bank account is to be debited, and to share allotment account if full amount is collected. If part of the amount is not collected, in that case, what we have to do? We pass the journal entry as bank account is debited and calls in arrears account is debited to share allotment account. In case if some money is not collected in the second call, in that case, we pass the similar type of entry here. Bank account is debited, calls in arrears account is debited to share second call account. As per the Companies Act of 2013, a company can charge interest on calls in arrears that should not exceed 10% per annum. Okay, this is the way how calls in arrears is to be adjusted. Next comes calls in advance. Calls in advance. What is the meaning of this? Some shareholders, what they do, at the time of making the payment of call money, they will pay even future call money. Assume company has asked the shareholders to pay first call of rupees 20. Assume that second and final call is also there rupees 30. Assume application and allotment I have not taken here. When first call is made, what the shareholders do, some shareholders, they will make the payment of second call as well. Instead of paying rupees 20 per share, some shareholders will send rupees 50 per share. It means advance amount will be sent by the shareholders to the company. Therefore, whenever advance money is collected by the company, that time what the company does, company will open calls in advance account in the name of that particular shareholder. Okay, whenever calls in advance is given in the problem, you remember calls in advance account shows credit balance. Calls in arrears account shows debit balance, whereas calls in advance account shows credit balance. Therefore, here how the journal entries are passed. You take this example. Assume 1000 shares are there. 1000 shares. Here, Mr. A is holding 200 shares. 200 shares. What he has done, instead of sending rupees 20 per share as his first call money, he sends the complete amount, or he sends even the second call money. Total is how much? Rupees 50. 200 into 50, he sends rupees 10,000, right? But actual amount comes to how much? 200 into rupees 20 per share. It comes to rupees how much? Rupees 4,000. Instead of sending rupees 4,000, he has sent how much? Rupees 10,000. Here, whatever excess amount is paid by him is called as calls in advance. You see, excess amount comes to rupees how much? Rupees 6,000. Therefore, this 6,000 is called as advance money collected from Mr. A. Okay, here, as per the Companies Act of 2013, a company has to pay the interest not exceeding 12% per annum to such shareholders. This you have to remember. Now, if advance amount is given by the shareholders, that time what type of journal entry we have to pass? Just you see. Assume when first call money is collected, what journal entry we pass? We pass bank account, we debit to share first call account. Share first call account. Share first call account. Assume company was expecting, assume rupees 10,000 as call money. Total amount of call money expected by the company was rupees 10,000. But here company has collected rupees 12,000. Try to understand here. 2,000 is the advance money which the company has collected from some of the shareholders. Okay, 2,000 is the excess money collected by the company. Here, bank account is to be debited with the amount of rupees how much? 12,000. But assume company is collecting this one as first call money. First call money is how much? Rupees 10,000. But how much company has collected? Rupees 12,000. Therefore, in this rupees 2,000 is considered as calls in advance. That is why here bank account is to be debited with the amount of rupees 12,000 because 12,000 has been received by the company. But share call account, share first call account is to be debited, credited only with the amount of rupees 10,000 because first call money is only rupees 10,000. Therefore, that 10,000 is to be taken here, and whatever advance money has been collected, that is to be written here as calls in advance account. Calls in advance account, rupees how much? Rupees 2,000. Rupees 2,000. Try to understand here. Whatever advance money has been received by the company, that will be adjusted as and when company makes the next what you call. In that, this amount will be adjusted. But on this calls in advance, company will give interest as per the Companies Act of 2013. Therefore, that should not exceed how much? That should not exceed 12% per annum. This is the way how the calls in advance account is to be adjusted in the journal entry. Next one is in case of calls in arrears. One more important point you remember. Whenever the calls in arrears money is received, we pass a reverse entry. See, when calls in arrears is there, what journal entry we pass? Calls in arrears account is debited and such call account is credited. You take for example here, calls in arrears, assume here rupees 3,000 is the calls in arrears amount. Calls in arrears account is debited with the amount of rupees 3,000. Next one is to first call, share first call account, rupees 3,000. Here what we have done? We have debited calls in arrears account. Just now I explained you. Whenever application money is received, that time what do? We debit bank account. Next one is calls in arrears account is also debited, and to share first call or second call, final call, that is to be credited. But here calls in arrears account is debited, but when this calls in arrears amount is paid by the shareholders, assume that whenever the shareholder make the payment of this calls in arrears, that time company has to credit this account by passing the journal entry as when the calls in arrears amount is collected, that time journal entry is bank account is to be debited rupees how much? 3,000 to calls in arrears account, to calls in arrears account, calls in arrears account, rupees how much? 3,000. Here calls in arrears account is debited. Now calls in arrears account is credited when the amount is collected from such shareholders. Now this account gets closed. Calls in arrears account gets closed. Here it is debited, here it is credited. That is why you remember whenever calls in arrears is given, that time we always debit calls in arrears account. But whenever the calls in arrears money is collected by the company, that time what journal entry we pass? Bank account is to be debited and calls in arrears account is to be credited. But whenever advance money is collected by the company from some of the shareholders, advance money, that is calls in advance, always shows credit balance. That is why here whenever advance money is collected, that is to be transferred to calls in advance account, that is credited in the entry as calls in advance as shown in this entry, is 2,000. I hope you understood the concept.